focus on the less. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your Watchlist coming in at April 7, 2021, and the stock market is entering a new level. And I got 3 stocks that I'm looking at tomorrow and one that I think I'm going to buy. But today was a very interesting day. Every market ended up closing red. It wasn't like that all day. We got to see the European effect and everything else. Everything came back to normal. The bonds were pretty chill, and I got one indicator to show you. But this new level we are entering has to do with everything from policy all the way down to rotations within the rotation. So we have been getting some of those broader market moves. You've been seeing stuff with commodities, but there's a lot of things getting thrown into the mix, and even a lot of the news we had today, a lot of it was surprising. And to top it all off, we still have the FOMC, and the quarter is just beginning. We haven't used the long-term deposit, so there's still a few things we're looking at, so I hope you're ready. But we got a lot to talk about. I want to go over what happened in the market today, what we're looking at tomorrow, the plays that we made today, and then the plays that I'm looking to look at tomorrow. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, watch the watchlist come to life, and yes, if you find out 18 years later that you are actually the shareholder and you are the father, then yeah, we're the place to be. And the most important thing you need to do, post your watches below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. And to give you another surprise, we are not going to be live on youtube.com/thestockmarket tomorrow. We are going to be live on Colt Real Estate. So I got a couple things I will be sharing with you later, but hopefully we see you on there. So if you do get confused, a lot of you were confused today about finding the chat, but we will not be live on the main channel, and we will see you there. Lending Tips will be hosting something else for you, so I hope you're ready. So right off the bat, today was all about the policy, and that is still going to be in play. Even though we were expecting a bigger effect overseas, it was actually quite muted, but there was a lot of talks about policy and a lot of actions and things that came up, and it's really everything from the Jobs Act all the way down to real estate. We talked about the 40-year mortgage. That is the plan that came out yesterday with Biden about stopping the evictions on August 31st. They want to introduce a 40-year mortgage. That was important, but a big piece of news that came out today, and depending on how it got interpreted, it was Democratic leader Schumer saying that they could use the Budget Reconciliation Act to get the Jobs Act passed, but that in and of itself, the fact that that was even brought up could be hinting at a slower stimulus. So this is kind of watered down some of the inflation hype a little bit. We've been seeing the dollar chill out as well as the bonds, but this is what we were looking at all week. It is still pretty early, so how the rest of the week develops in any of this, the market might be prone to this stuff, but we haven't been seeing these actions throughout the day. It's something that you're probably going to see react in the morning or later towards the day, and now we keep talking about it, and you definitely saw the effect today, the European close. So we wanted to see how the markets yesterday affected us. They did have some effect, and the market was able to do its thing, but now we want to see how this continues to play out. The second quarter is starting. We've talked about this, and this is what I mean where the market is entering in the new level, because you have a lot of things rotating and rotations within the rotation. So coming into tomorrow, we have the FOMC minutes and a bunch of other things, but any policy talks are going to be key, or if you see any laggers or leaders created through any of the main stuff we've been watching. But that being said, now there is a few things at play. A lot of us have been watching the reflation trade. It relates to inflation, the dollar, and all of that, but oil and China, specifically oil, that one's getting important, but now there is now global drama developing on both fronts, so it's even affecting the global currencies. We got fake rumors out of OPEC last week, so seeing oil drop below 60 and everything else, this could be very important. And now China, there's talks about the United States boycotting the Olympics in 2022, so this is key because this could raise tensions, and you already saw a couple weeks ago there was the H&M stuff, the Nike stuff, all of that, so this makes it very, very key, especially as we tie this into the currency, but this is going to be broader. However, these are events I would keep an eye on because you're seeing the market, it's responding to the rest of the world. Again, the reaction was a little bit smaller than what we saw, but any of these keywords, anything related to China, oil, anything anything of that nature, that could develop into something big. But that is what I want to watch, and I'm seeing it as new information considering what we have here. But now coming into this whole rotation, you have the growth and value rotation still at play, but now we are seeing a rotation of growth within growth itself. So we talked about this today. You saw certain stocks, but there's different tiers. There's the big name leaders, there's the companies that were holding up, but then there was the companies that should have went up, but they didn't. I was referring to them as the liquidation stocks, some of the ones like Peloton, Zoom, all of that. Even though a lot of things went up yesterday, those companies didn't get steam, and now those shot up a lot today. You even saw, I think Roku was up 9%. It was pretty crazy. And like I said yesterday, it could also be because that Archegos situation. I said we didn't get anything, but we actually ended up getting stuff here today before the market even opened. They fully disclosed the loss. It is about $4.5 or $5 billion. And one thing I would say is watch out for any legal fees. We might see if that number gets bigger, but they suspended buybacks, all of that. Bank stocks did pretty decent, but I would watch for a carryover effect as well. And I want to see if there's any hints at it from the FOMC, but given the fact that the FOMC is 1 month behind, we probably won't see anything else. But with bonds chilling and everything else, it seems like that situation may not have been as bad as we thought, or we will see. But bringing this into the final piece of stuff, it has to do with the reopening in the virus. We've been seeing a lot of talks with vaccines and all of that. There was news out of California today that they're going to lift most restrictions by June except for the masks. Disney said they're starting to open up reopenings and accept bookings online. However, if you were watching, there wasn't really that big of a reaction from anything from airlines to cruises and all of that. So that being said, I think it might be priced in, but bringing this back to the beginning, a lot of this is going to have to do with policy, and it feels like the market is going to start taking a shift to responding to policy. We saw the rotation at the beginning of the year. We got to see a little bit of hype, but now it's looking like policy and news might start taking effect as the presidency and more actions are starting to come into play, and there's a lot of those key deadlines like that whole mortgage thing in the August 31st. So expect a lot of moves in the morning, expect a lot at close. It might be a little bit boring, or it may stall out until something happens. That's why I brought up the melt up mode yesterday, but like we also talked about, keep in mind the premiums and do not forget there's earnings. And shout out to Colt, baby. A lot of you posted it in the watch list. You are getting your bank earnings next week, so we really want to see how that one plays out as well too. But overall, the key is going to be watching the policy, and if there's no policy, finding the winners and losers. And if we start to see that market widen, we have a bunch of companies moving. Some held up a lot of strength, some haven't caught back up. This is where things should start to break away as the second quarter gets started, so I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different plays, or actually 4. One of them's really hype, but out of these 3 plays, I really want to make a play, and I like all of these companies, but my problem is I don't want to make too many trades. Less trades, more profits. I need the market to kind of confirm what we got here on our hands for the second quarter, but we saw a lot of individual news, both short-term and long-term, and that's what's giving us our plays. But as far as the long-term, this is related to policy, and this is why I'm bringing up the news, but UWMC and Archite, they were talked about today on CNBC as being undervalued. We own both of these companies in the long term and in the swing term, but UWMC is my favorite. I still have those 4,000 shares or whatever, but the idea here is if there is any sort of new legislation that would be enacted by August that could relate to mortgages or anything like that, that could be very, very positive and increase the demand for some of these mortgage companies. Pretty much, if a 40-year mortgage becomes available, that means a lot more people will qualify because that's going to be cheaper payments, even if you have to pay more over the long run. So I really like UWMC. They popped up a little bit. Archite, they popped up off the CNBC talk, but one thing Chad noticed, the premiums didn't go up too much, and that is one thing I want to watch is the story with the premium, and get ready for earnings. If you're looking at some of these plays, make sure that you could get earnings wrapped in them, especially if you're doing options, but we are still holding those Archite debit spreads, and then we have the shares in UWMC, so that's one I like, but got a lot of exposure to it, so we'll see how that plays out. The second play, it's going to be ABBV. They have their ex-dividend coming up. I'm looking for that run-up, but it's actually looking pretty ugly. Sometimes it'll stall out, but they had a pop a couple days ago. They came back down. There's been a lot of different news for it, so I think it's looking ugly. I like it. I want to see the premiums. A lot of the premiums went down, but the question is, how much of a pre-run-up is it going to be? I know we've seen some big ex-divvy run-ups. However, ABBV is still a pretty slow mover. We bought it at like 80 in the long term. It seemed like a good idea. 80 to 100 took a really long time, so a lot of those out-of-the-money options, you got to be careful. Some people ask, should you play short-term? That is just going to be the risk to reward, and you better get in the money by ex-dividend, and usually afterwards or the day of, it should sell off, so we'll see. But there's that, and then finally, DraftKings, baby. Again, another long-term pick we got, but they did really good. good, and I think they are a winner of the model, not necessarily gambling. So there was New York news. It looks like the gambling legislation is going to get passed, but one thing highlighted was this word model. So this is where I really like DraftKings and where I really think it stands out, because DraftKings is a little bit different than just straight up sports betting. It has a different model. It's kind of like fantasy sports. So I like it. They're running up. They shot up even more after hours. They were popping and dropping. There was a lot of news throughout the day, which made it interesting. But one of the biggest keys with all of this is what I've been talking about really all month. DraftKings has been one of these winners of the growth stocks. It has been a winner of the market widening. So that's why I really like it. So going to be keeping a watch on all those. These are going to be some of the 3 main plays I'm going to be looking at. I think I might take one tomorrow. It really all depends on how it plays out or if there's any other external news. But if it does get dampened down tomorrow and it's not there, or the premiums just aren't really showing it, or they're too far out the money, I will not take anything. Again, I really want to snipe for some good one, but it is good to see that we are getting news. And then finally, RMO and CCIV. I don't like these stocks. They're hype stocks. I'm not going to play them, but they shot up a lot today. There was a lot of news back and forth. CCIV is a SPAC. I don't know about RMO, but they shot up. But you got a lot of eyes on those. If you're a day trader, scalper, you're into any, I don't know what y'all into. I mean, that just do your thing. But this one was brought up a lot in the chat today, so we will see how that plays out. So those are going to be the main plays. As far as everything else, I want to keep watching those Netflix. They had a nice move today. A lot of interesting random pops for the day. We saw it a lot, but those premiums that I talked about, they started to come up. Those premiums should have decayed. So I like that, because these are some of those top tier winners that did good. And again, those other second tiers, kind of like Peloton, Zoom, anything of that nature, you could see they really outperformed today, and they had some pretty massive moves. So watch them. Surprisingly, the chip makers, they were good, but then they ended up selling off. I want to see this. There is a catalyst. I believe Intel or one of the companies is meeting with the White House in a few weeks, so that could be something. And again, like what I said with this administration, they've been giving a lot of good lead times with some of this data, so there very well might be a play there. So watch them. Watch SAP. I still like it. It did come down, lost a little bit of the steam, but I'm pretty sure the options held up. Even though they were down 2% today, the options still ended up closing down 12, so not too bad. And that's kind of just more validity that we got it at a pretty decent price, the whole snake in the chain thing. So I like that. So I'm still going to be keeping my eyes on them, but I also want to watch Walmart. You know, looking at the portfolio, they had news today. I forgot what it was, but it looked kind of promising. They had their pop, and then they kept continuing forward from there. So we had plays, but Walmart is actually entering up one of those higher levels. Remember, it was just at like 120 something. So kind of reminds me of a slower HD. I want to keep Walmart on lookout, but we'll see how this one plays out. We have exposure, but those plays are down 70%. But this is what I'm saying with premium and earnings. You're seeing a lot of different stuff start to come out of the grave, and even one of those was Asana, if you guys remember. So I'm going to be watching those, and I like those. But then another play too, Eric, there was news about like a potential acquisition or something. We have these free shares. The fact that MP didn't go with it, that was interesting, but I'm going to be keeping an eye on them. I want to watch the China stocks again, Baba, Baidu, all that, but they have held up. And the key is just watch the overall trend and even the premiums. You can see here, these are definitely lagging, and it's definitely operating a little different, but those premiums have been clapped. So it could be an opportunity, or it might base out here until there's actually brand new information that could cause it to go up or down. So watch them. I also want to watch Snapchat, and this even brings up Pinterest as well too. They kind of move similar, but these are some of those second tier growth stocks. But like I've been talking about, these are the growth stocks that held up. Again, you see the 2020 run up, they shot up, they came down, but they did not lose those 2021 highs. The same thing applies with Snapchat. The fact that it's already back up to this level again and getting up there is a very good sign. So I like that. So those are the ones I'm going to be watching. And then finally to TLT, but this isn't TLT. This is the dollar. And you can see here now, I'm going to zoom in. This is what I was talking about. You're starting to see the dollar drop. So if it really comes down a little bit more in the next few days, and this is going to be linked to the policy, if it comes down heavy and then shoots up, we'll see what happens with the FOMC minutes or anything following or any policy. That could be an indicator. Otherwise, things are really chilling out. And then when it brings us back to TLT, you could see how the story is being painted. The bonds are starting to chill out, and this is what we've been waiting for. And this is substantially different than anything we've seen all year. So even tying this into the 40-year mortgage news and everything going on, this is very good. It also relates overseas. Remember, we were talking about demand for hedging and all that around here, but then it kept dropping. So you're getting close to that one level. So my real question is, does the range stay in here, or does it kind of come up a little bit? But as long as bonds chill out, we are really going to see the market widen, and we are going to see the winners and losers, and that is the main thing we want, so we could start setting up. And I hope you're ready, but That is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to go forward, but you ain't going back, baby. But the code loves you. I love you. I'm gonna see you in the morning. Let's go.